We have a new addition to our portfolio this month, which favours stocks that pay a high income relative to their price. And we look at why it's outperformed by digging into the contents of the fund. And we also look at some highly correlated funds to see why that style has done well. Then we turn to my global winners portfolio, which has outperformed the S&P 500 by choosing funds that have the best momentum. If you want to follow this portfolio, you can do it for free on stockcard.io, who's also sponsoring this video. So let's look at my global winners portfolio in a bit more detail. If we step back a moment and look across the course of this year, and we look across different asset types, you can see that almost everything is down on the year. So that includes gold, short-term government bonds, junk bonds, emerging market bonds, real estate investment trusts, the NASDAQ, long duration bonds, and of course Bitcoin. The only thing which has done well is USO, the US oil fund. So that's why momentum's performed well this year, because either directly or indirectly it's chosen funds which have performed well, which in many cases has been something to do with energy. So that's why it's kind of exciting that we've finally seen another style of investing come to the fore. And that's VYM, which is a high dividend yield fund. Now, if we dig into the contents of VYM, and these are the 10 largest holdings, some of them are energy funds like Exxon and Chevron, but others are pharmaceuticals like Eli Lilly and AbbVie, or defensives like Johnson & Johnson. But we also have some banks here like JP Morgan. So it does seem as if we've reached a little bit of a turning point. Now, if we look across different funds to see their correlation with VYM, I've sorted them here by that correlation. And this is based on daily returns between 2020 and 2022. The ones which have the highest correlation are the ones which are value funds. So for example, this large cap value fund, which is IVE, has a 98% correlation. And another large cap value fund, which is the Russell 1000 Value ETF, also has a correlation of about 98%. Now, there are some sectors which include industrials and financials, which also have a high correlation with VYM. But growth, which is the style of investing that did well for a decade, particularly large cap growth, is well down the list in terms of correlation. Now, it's important to understand that high dividend yield is another measure of value. That's because the income which is paid is high relative to the price of the fund. So if we turn that around, another measure of value would be a low price relative to earnings. So generally, the styles which have done well this year have been the ones which favour value stocks. So here are some funds which have a correlation of more than 90% with VYM. And you can see there are lots of value funds here, but there's also financials and industrials. So XLI is industrials, and XLF is financials. And they certainly seem to have had a big uptick recently, as has VYM, of course. Now here's the stock card for VYM, which has lots of goodies that let you see exactly what the fund is, but also its attributes such as its sector composition and what kind of exposure it gives you. So let's zoom in on this section, which is the sector exposure. So if we expand this, you can see that the actual sector composition is quite unusual for a US stock fund. What you might expect to see is a lot of tech. For the US, it makes up about a fifth of the index for the S&P 500, but tech here only makes up about 7.5%. The largest sector is financial services. The second largest is a defensive sector, which is healthcare. And the third largest is consumer defensives. So not the sexy sectors, which did well for a decade, but the kind of beaten up sectors, which do pay a high income. Now, as interest rates have been surging upwards over the course of this year, defensives suddenly seem much more attractive. And income-paying stocks, which pay you some kind of income while you wait for the stock market to recover its price, also seem attractive. So if we focus on the dividend section here, you can see that StockCard is telling us this fund is a good fit for a dividend portfolio. And we could also look at the dividend yield, which is about 2.9%. We can also look at the top 25 holdings. So here they are ranked by their weight in the portfolio, with Exxon at the top, then Johnson & Johnson, JP Morgan, and so on. Now, as we said, valuation should be low for this fund because high dividend yield is just an alternative way of measuring value. And sure enough, it tells us this is an undervalued fund. So people have been talking for a long time about value's resurgence as a style of investing. Historically, it's been a very good performer, but during the era of free money, which lasted a long time, it certainly underperformed. So perhaps now that the Fed is going to keep rates high for a while, it's becoming much more attractive. So now let's turn to the portfolio, and I'll just briefly describe how it works, and then we'll go through our choices for this month. What funds can we choose from? Well, we have 44 single country ETFs, that's our first group. We have 18 factor funds, one of which is VYM, which we saw earlier, but we have other factors like value and growth. We have 11 US sectors, so these would be individual industries in the US. We have 8 commodities, which include things like precious metals, but also things like agricultural products. And finally, we have 9 bond funds to choose from. And the way we select funds is based on momentum. So we look back at returns over the previous 180 days, and whichever one of these funds from each category has the greatest momentum makes it through into the portfolio. So at most we have 5 funds, and if none of the funds have a positive return within the group, then it doesn't put forward a fund at all. And that means some months we might be completely in cash. How well did the strategy perform last month? Well, you can see our choices last month were Turkey, which has done very well in terms of momentum, but also Energy Select, that was our sector choice, that also performed well. In fact, both of those beat the S&P 500, which was up 11%, whereas those were up 16 and 21% respectively. Our choice which underperformed was DBE, the PowerShares DB Energy Fund, which only returned 3.3%, which is less than the S&P. Now, if we'd have had perfect foresight at the beginning of the month, these are the funds which would have done best. Amongst the country, Poland had a spectacular 34% return. Amongst the factors and styles, PSP, the listed private equity style, would have done best. Amongst sectors, materials was best. In commodities, silver was best. And in fixed income, emerging market bonds were best. And these are hard currency emerging market bonds. Now, before we move on to talk about the fund choices for this month, this is what Stock Card looks like. And if you want to find my portfolio, then you simply look for my name. So Ramin, click on portfolios, and here it is. And I said you could track this portfolio for free. All you have to do is click on this bell icon to follow the portfolio. And you can also see when I make changes. So for example, if you look at this week or this month, you can see that the VYM fund has been added to the portfolio. Now, I showed you how useful it is to dig into the information about each of the ETFs. If you don't have a VIP subscription, you only get to see 5 of those ETF stock cards, and that's per month. Now, personally, I think it's probably worth paying the VIP subscription in order to see those stock cards and an unlimited number of them. They contain a lot of useful information, and just in a glance, you can see what's going on with the fund, including whether it's got a lot of traction with investors right now. Now, for people who are new to investing, I think this summary is really simple and really easy to use. And if you do want to dig into the detail, you can always do that. So if you wanted to see what low risk means, you could just click this and it'll show you the 2 types of risk it uses to score ETFs. And that's performance risk and qualitative risk. So if you do want to give it a go, I think the VIP subscription is probably worth it. You'll get 10% off as a viewer of PensionCraft. Just use the promo code PensionCraft, the name of our channel with no spaces. Now let's get back to our choices for this month. So let's start with our country choice. And if you look at the momentum by country, you can see that Turkey is the very clear winner. It's had a return of 61%, which is just far higher than the next largest fund. Mexico only managed a paltry 6.5%. And if you look at the cumulative returns over this 180-day look-back period, you can see how well Turkey's done. There aren't even any nearby contenders when it comes to country choice. So again, Turkey's going to be our country choice as it was last month. Next, our factor choice. And you can see that VYM has just pipped into positive territory, which means it now qualifies to be included in the portfolio. Although minimum volatility, which is a kind of low risk style of investment, but also large cap value, are not too far behind. So these could be contenders in months in future. Here you can see them slowly catching up with VYM. They all kind of track each other upwards. Amongst sectors, here there's no change. We're going to stick with energy, which is way above the next highest sector, which is healthcare, a defensive. And looking at the cumulative returns, you can see that there's a long way for XLV to go to catch up with energy. And XLV is that healthcare sector ETF. So here our choice is going to be XLE again. Amongst commodities, we're going to choose energy, so that's the DB Energy Fund. It's possible that the sugar fund, Cane, will catch up with it, but it's certainly not going to happen anytime soon. So our choice here again is an energy one, which is DBE. And then our bond choice is not to include a bond. You can see the return over this 180-day period was negative for all of the funds. Although you can see some recovery in some of these treasury funds. For example, TLT below has certainly rallied pretty hard recently. But SHY is the only one which is anywhere near positive territory right now. That's a really short duration US Treasury fund, which hasn't sold off much because it has very short duration. It's quite cash-like. But even a high-risk fixed income fund like HYG, the junk bond fund, has certainly rallied a lot recently. So maybe we'll move into positive territory later this year, but for this month, no fixed income. In summary then, our choices for this month are going to be TUR, the iShares MSCI Turkey Fund. That'll be our country choice. Then we've got Vanguard High Dividend Yield, VYM, for our factor choice. That's our new entry. And then in sectors, we'll choose XLE again, which is the Energy Select Spider Fund. And for commodities, we're choosing DBE, the PowerShares DB Energy Fund. And for bonds, we choose no fund at all. So it's nice to see something which isn't energy in the portfolio this month. And VYM does have some energy, but we saw it also has a lot of exposure to financials and industrials, for example. And you can use StockCard to drill into that to see what the sector composition is. But also lots of other things, such as the cost of the fund and whether lots of people are buying it at the same time as you. Now, don't forget our offer from stockcard.io. You can find that in the description beneath me, and just use our name of our channel for the promo code, PensionCraft. And, as always, thank you for listening.